Hey everyone, John Henry here, slingshotfutures.com. Welcome to the Market Mindset, where we dig into the psychology behind the moves today so that we can better understand tomorrow. This time around, we're going to be taking a look at the good old 30-year bonds. Now, if you haven't traded the 30-year bonds before, there are a couple things to note about the 30-year bonds. Generally speaking, it's a little bit of a slower market. The big thing that really drives a lot of volume to the bonds are simply the fact that it has a massive payout for a tick cost. It pays $31.25 per tick of movement, and that draws a lot of attention from traders who maybe are just looking for a quick scalp, because those quick scalps can be very profitable at $31 a tick. So overall, looking at the bonds, we opened up with a gap higher. Now, from yesterday's movement, we didn't have anything going on yesterday. We had a big range to start the day off, not really any big clues, just looking for much the same, right? We opened up today above, right? We opened above that gap fill. Now, today's a little bit of a different one because we have non-farm payroll news that happened a little bit earlier, and that's what this big spiking candle is. Now, when non-farms come out, generally this is the type of day that will have, or the type of news rather, that will have a big impact on markets like gold, pretty much everything, honestly, but markets like gold, the bonds, the US indexes, currencies, that kind of thing. It'll have a really big impact, and the bonds are one of the heavier of them to be impacted. In this case, had a very quick drop lower, immediately filled the gap, looking very bearish. The problem is, with this news announcement, there's a ton of wick on the top and even more wick on the bottom when they filled the gap, and they couldn't even close past the gap after all of that bearishness. Likely, buyers were buying below the lows, assuming that the breakout was going to fail. Found a double bottom there. When the sellers tried following it up with more selling pressure, they couldn't even trigger in the sellers to get the move going before turning and closing bullish. Any remaining sellers that would have been waiting there saying, you know what, I don't care, I still want to sell it, we closed underneath the gap, good enough, they're taking not a great trade anymore, but they got triggered in and immediately ran out of the trade. So with that big seller stop run in a huge run higher with a bull engulfing candle kicking the move off, it's a really big clue that the buyers are taking over this market after the news, and they're looking for at least a drive back up to the high of the day. We may just end up as a range there and cycle back down. That remains to be seen, but we're looking for the buyers to take the move up and tag that high. Beautiful bounce off of that area as well, and it drove all the way up and broke out aggressively. We slammed above the highs of it, and they even pulled back and held it to the tick, right? So knowing that the buyers are obviously aggressive in this buy area, we're looking to buy a pullback, buy low. We don't want to buy way up here because there's no room for profit anymore. We need to buy low to get into the trade so that there is room to drive the market back up towards the highs. And this one actually gave you a couple attempts to get into the move. Nice little pullback for a limit buy. Pushes back up, finds a double top. Comes back down, notice where they go to, right? A lot of buyers will have bought right there. One tick underneath that little bear candle there. Comes back and tags it to the tick. Now, why is this important? Well, this is an area of major interest for a couple reasons. Buyers obviously bought the pullback. And the fact that it hit a double top is going to make those buyers nervous. Now, if you're a huge fund and you need to get a lot of orders filled, what better way to do it than to whip out a bunch of buyers on their stops? Because what are their stops? Their stops are sell orders. It's much easier to get big orders filled when you have a boatload of people getting stopped out. So they came back, break-even test, immediately rocket ships back up to the highs, and that is another reason understanding the context of the situation to drive the market up and continue that slam higher into the wedge top objectives to finish off the morning. So just an absolutely beautiful morning on the bonds, and a great example of, even though it is a slower market, you can still pick up some phenomenal moves, and at $31 a tick, it doesn't even have to be that big of a move to make it worth your while. So hopefully you found it interesting. Hopefully you traded safely through the non-farms today. It was a little bit whippy. And hopefully you found this a little bit interesting and maybe you learned something. But until next time, enjoy the weekend and we will see everyone on Monday.